Right. Talking about the Renko, talking about obviously the CSI to highlight trades, slower time frames, multiple time frames, see what's going on. Just want to pick up the narrative on the CAD yen, obviously it's got the oil, the link to oil as well. I'm just going to take everything off because it'd be easier to see. I'll just talk you through just some multiple time frames and etc. Now, what we can see here is and the support and resistance, and using how the levels can come into play, and both for a target perspective, target in the sense not from a pip value perspective, but in the sense of, you know, that's where price is likely to stop, pause, possibly reverse in the different time frames. But let's go down, let's go up to the hour. And we say, I use, this is just me, the hourly is one that it just gives me what is happening on this is in the set of timeframes that I tend to and I use. I look at the day, but my hourly one is the one that tells me whether I think there's going to be potential for a continuation. You know, is it going to carry on or is it going to reverse? Anyway, what we can see here very clearly is the yen is still rising. You have to remember that markets can stay overextended for a lot longer than you and I can stay solvent. There is still you know, selling going on in the Canadian dollar. Not surprising to see that. So let me just park that over there. So that's the situation we have on the CSI. Let me just park these two over here. How does that play out in the charts that I have? Well, on the daily chart, as I said, interestingly, the CAD yen is now below the volume point of control, so it's looking bearish. Again, not surprising, but looking across where it has been in a range. Congestion, consolidation, it's a range. Swing traders, people, traders who, and by swing trading, it's really traders who stay in a trade longer, and they look for those points where they really they're reversal traders, David, aren't they? They look for a swing low, a swing high. We've never really understood the difference, and people make this books and books written about a swing trading, but actually if you break it down, what you're looking for, a swing high and a swing low, it's a reversal. You know, when it's in a range, it's probably not easier, but you've got, you know, you can draw your line up there, you can draw your line down there, and you think, okay, it's a consolidation. Does it make it easier? I don't know. I mean, trading is not easy per se. In a trend, that is a nice trend. Then we had I've got a bit of a gap there. I'm not quite sure why, but anyway, in a trend, what you're doing in a trend, if the chart is, forget this bit here, if this was down here, what you're going to see in a faster time frame, as I mentioned a couple of sessions ago, is you're going to get pullbacks, corrections, and what you have to decide is whether that is a primary trend. And these moves that we see here against the primary trend, was that tradable as a secondary trend, or was that a trader was used as an opportunity to get in and move back, move lower on, sell it basically? It was, what do they call that when they say they sell a pullback, don't they? There's a correction come in. I can't remember the trade. Yeah. Anyway, if you take that as a primary trend, that is your secondary trend. Is that actually a secondary or a reversal? Well, the volume will tell you that. The VPA will tell you that. So when you've got a chart that is pulling away in a defined trend, what the type of price action you see in the faster time frames is very different to the type of price action that you will see when a market is in a range, and this is in a range. So slightly different tactics. But swing trading, you're in slightly longer than sort of scalper. It's hours, maybe days, and what you're looking for are those points in the range where you think that's your swing high, that's your swing low. That's all I'm going to say about swing trading at the moment. But what is happening now? What is happening now is that this is the fulcrum of this consolidation page. This is what the volume point of control does. It tells you this is when there is always a time in the market, in any instrument, when the market is in balance. There's no firm direction in one way or another. Maybe it needs waiting for a piece of news. Maybe it's seasonality. It could be a myriad of reasons. It's in balance, and this is what the volume point of control picks up, and it's volume and price over time. Now, the longer it stays in this kind of phase of price action, this is where Wyckoff's second law comes in, which is cause and effect. And when it does break away, then that break will tend to reflect, if you like, the time that it has been in the consolidation. It tends to be stronger. So with the CAD yen, it's now below the volume point of control. But we can see here it's broken away from the volume point of control on a number of times, and then it is reversed back into it. But for the time being, let's take it. It's moving down. It's bearish. The oil market is collapsed, etc. So there's lots of reasons to suppose that this is, it is the move lower is it's reflecting what's going on in a related market. So that's interesting from a daily perspective. Then I go back to my hourly chart, and I can see here, you can see we've had a break from the VPOC here. It's moved lower, volatility. Then we've had if you like, this is a trend lower, but it's a trend with volatility. And this is the other thing about trends. Those of you on the program, those of you who've read some of my books will know, markets move up and down in trend, and they move sideways, but they don't, they're not all the same. Not all trends are equal. So you will get a nice smooth trend, sort of nice sort of steps lower with a few little corrections, and then on it goes. You get a nice sort of a smooth waterfall, as it were. Other times you get a trend and it's horrible and it's choppy, and you get volatility and you get quite sharp pullbacks. But again, you look at the volume underneath those candles. Is it out of sync with the range of the candles to tell you whether, in fact, this is just a pullback, this is just a mine, but actually the trend will continue lower? And this is this type of trend. We had the break from the volume point of control. You can see here again. At this point, it was in balance, for want of a better word. Then we had the pull away. Then we had this big candle here on volatility, because the volatility was triggered, and the volatility is triggered because that move is outside of the average true range. What then happens? Price tends to revert within the spread of that candle, and it did actually carry on. It wasn't volatility, and we had another pullback there. This is an interesting candle. It's like a doji candle, but quite a wide spread, not a lot of volume underneath it. Another down candle, and so on it went, and this is the candle we're looking at the moment, and we've now reached a point of we've got a support level here. This is part of the volume point of control. This is the volume based on support. So that's what we're seeing on the hourly chart. We saw what was going on the hourly on the CSI, but what about I'm down at the faster time frame. So I have my Renko chart here. The value of my Renko chart at the moment, I think is a fixed value. Yep, it's one of my 3 pip ones. That's fine. What the Renko does, that smooths out all that volatility. And we can see here, the way you use the Renko, as I said, it tells you the nature of the move. Has it been smooth? Has it been, has there been momentum behind it? Or has there been minor pullbacks all the way down? Yeah, there has been. But it's held. The trend monitor has disappeared for a second. There it is. It's held. The way you use the Renko, you can use it as an entry point as well. You simply exit when the bright blue comes in with the dots, and then what you can do is you can then re-enter. So it's a great tool. It's a great indicator for when the price is in a trend already. I mean, you don't want to be accused of chasing price, but if you use support and resistance, and you know what you're looking at in terms of in terms of the price structure, primary and secondary trends, you will have the confidence to enter that trade. Some could say re-enter the trade. You're not chasing price. What you're seeing is you're making a logical decision. You can see there's still bearish CAD yen. You're not going to enter randomly, say, oh, I'll just get in here because I think it's going to go lower. You're going to use something like the Renko or a faster time frames. Wait for those periods of congestion to end, and then move and then take the trade to the downside. Then you go and look and say, well, go back to support and resistance. Is that going to be a valid move, or am I reaching another one of those key points on the chart that tell me that, you know, once I'm in, where's it going to? Is it going to pause or possibly even reverse? And this is where you've got the 2 time frames, and as I said, and I've set it up with the Camarilla, and also to show you how the slower time frames, support and resistance based on Camarilla, will then confirm for you, are you, is there any move, is anything left in this move, or do you know what, it's reached this key point and possibly it is going to maybe it's come to the end of the move, time to get out. On the 3-minute chart, as I said, what we're seeing at the moment, we're seeing on the time chart, let's just pull that up again, right, we've actually got the support, the price-based support level come up here, and it's tested it once, tried to rise, and it's come down again, and it's kind of back in congestion. This is that little move that we've seen on the Renko, which is a perfectly tradable little move. It is actually, let's see how many pips it is, 79.88, and we're down at where are we? Can't see here for a minute, David. Sorry, 17. Glass MT5, the colors are just awful. 75.88, 75.66. What have you got? 20, less than 20, which is fine. I mean, as I said, on certain days, people taking 20 pips, you'd have done well. You know, not all 100 and 200 pip moves. They're fantastic, but they're not the norm. The norm is 10s, 20s, much smaller. Right. So we can see we're coming into a congestion point, but if we look over here, this will give us the reason why it's coming to a congestion point. First of all, you've reached the S4. With the Camarilla, we've actually developed it for 6 levels. Most calculations out there in the on websites and what have you, they just use 4 levels. The way we've developed this indicator is slightly different. We've got some other bits and pieces in there. We've calculated it to 6 levels. But the key level is the S4 and the equivalent R4, because under the protocol, when price reaches this level here, S4 to the downside and R4, and breaks through with in VPA terms with volume, it is considered a valid breakout. But what it also acts as, because it's a key level, when the price reaches it, it will sometimes congest before breaking through. And also, even after it's broken through, you have to accept that it will sometimes come back and retest that level. The other levels to consider is between the R1 and the S1. And you will generally find that if price is trading between the R1 and the S1, we call the buffer, the neutral zone, it's a congestion, it's a consolidation. Now, what's interesting is we see here, we've got the 3-minute chart here with the Camarilla. It's holding quite firmly at 75.58. And we can see that it's reflecting the congestion that we can see on here. And we look over to the Renko. What's happening with the Renko? Well, the Renko has slowed. So that's 3 pips. Those 3 pips, they're taking a long time to go through the market, if you like. You can kind of sense the market slowing down, and it's slowing down because it has reached this key level on our indicator. Now, what's interesting is if we move over and put an hourly chart up, it's also at the S4 also happens to coincide on the hourly chart. And as I said earlier, the hourly chart, these support and resistance levels on the slower time frames, when you get a confluence of similar levels on your focus time frame, on the time frame on a slower chart, price will pause. It's going to take a lot of effort to actually go through that level. Now, the next question to ask us is, okay, once it gets through, if it gets through, what's going to happen next? Because obviously that's what we want to know, and we've got price, the candles to have a look at and the volume to have a look at. But in terms of levels on the faster time frames, this is why we put 6 levels in, that is where that's the next logical staging post, if you like, for this pair. It's a 75.33. So if you were in here or you were thinking, you think, well, there's a number of ways that you can consider this. You can say, well, if it actually gets through S4, and because the Canadian looks as though it's going to carry on falling, then that could be a potential, entry, all things being equal. Having the S5 there, you will know at least what is the potential for travel for this price. So you've got it down there. If it gets through there, often it will stop there and it will congest again, and then the S6 is the furthest reach for today. But this is for today. These levels will be recalculated once the market closes, and then tomorrow's levels for all time frames up to, but not including the hour. These are the levels that you will be given. And then on the slower time frames, you look at that, and obviously the S5 is that much further away, and the S6. And the S6 as well is, if it goes, many times it just blasts through the S6 and it just goes and goes, that's when you get a lot of momentum and a lot of volatility. But what these levels do is we believe, as I said, other than we have the price-based ones on the MT5, got accumulation distribution on NinjaTrader, and we've got the VPOT ones as well. They actually give you sort of very precise values. And if you're in something, you think, okay, fine. You can approach your trading. You're much more relaxed because they hold up. They just hold up. Don't ask me why they hold up. Why does Fibonacci hold up? Maybe it's to do with everybody's looking at the same levels. I don't know, but having those, they just give you a more comfortable feeling about what you're seeing on your charts. And always and the other way to hold this trade is through the Renko. That is not moving. It may have paused. We know why it's paused, because of these key levels that have cropped up. And this is still moving lower. This is still bright red. That's it. You just wait. Now, if you're not in this, then you just have to be patient. You really just have to be patient. Wait for those congestion phases. Wait for, possibly is it going to reverse? Is it not going to reverse? Or, find if it's going to be a reversal and swing low, back up to a swing high, or is it going to break? And you take the break. And as I said, by having the levels on the slower time frames, if you've got Camarilla, great. You might have some other method of looking at what's happening on the slower time frame. But to me, using it this way, it's just very, I don't know, what's the word I'm looking for, David? It's just so, there's no, oh? Yeah, it's just a no-brainer, really, and what they also do, obviously, if there is a reversal, you then know, well, where's it actually going to be running back to? And going back to the CSI, let's take this, just take that out of docked, otherwise it does all sorts of funny things. Where's it gone? Move this out of the way. And looking at, Frank's question about what we're seeing on the, if we go back here, well, what are we seeing here? You can see the extent that it's the Canadian, it's way beyond the point where you would normally expect it to bounce back from. This doesn't mean anything, this 20 and this 80, but it was a kind of a visual thing to give you an idea of the extent of the overextension, if you like. So if we go to 5, well, what's the 5 doing? Well, it's kind of trying to move higher, but look, it's kind of like, but also look at the strength of the move in the yen, because whilst this has been driven lower, obviously by the Canadian, you've got equal forces. It's being driven by an equally strong flow into the yen and an equally strong outflow out of the Canadian. And Yeah, is that okay? If you've got the same thing, you've got to talk there as well. And I'm keeping an eye on my levels. It's breaking through the S4 on the 3-minute chart, and if it's supported by volume, that will carry on. So what we're saying is, on the hourly chart, it still looks there's more room for this move, and all the pullbacks on the faster time frames are very shallow. They're just minor pullbacks, because the dominant trend for this pair is still bearish. Right, that's what I'm going to say. Pass over to David, and I think then we're going to stop. Is that all right, David?
Yeah.